The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days, and today being April the 13th. Monday, we're looking at a market that's just been open just over an hour and a half, and very interesting. What I'd said to subscribers, actually I sent out all my, I don't know how many charts I sent out over the weekend, but one of them was the overview and market today section. That was, I sent it out Saturday or Sunday. That was for today, Monday. Usually I send that one out. I do the Dow chart. I do this one right here. I do the Dow chart right there. And I do, where's Monday? There it is. I do the paragraph that covers where we are and what we're looking at technically. Then I add another paragraph, and that kind of explains not just the patterns that we're looking at. For instance, actually, the one I sent Saturday, I'd done twice by mistake. I sent out the first one. I sent an updated one today. And that was to say that there was also, I forgot to mention in the first one, it was right there, and then I forgot to add it, that there were 15 sessions to the high between the March 2nd, 18,288 level, that's the all-time high in the Dow, the pullback to 17,620 on the 12th of March, and then the rally back up to the high at 18,205 that was made. They went to a peak C minus, peak C, but maybe it's a minus. Yeah, it was a minus because we went lower. On the 23rd of March, we went down, we went lower on the 26th of March to 17,579, started a brand new move to the upside, which is in leg B. I call it gray B because as long as you're underneath the previous major high of peak E in the Chapman wave at 18,288, this is a retracement failure mode. That does not ascribe a negativity. It just explains that you're underneath the previous high and you can fail at a B or an A or a C. You don't have to get to the D. Other things give you the information, and like the MACD's running very nicely. The stochastic is running very nicely, but still only at 63%. So when we put that together, what I'm looking for here is that, and what I said to subscribers was, whether if we open up weak, we should rally and then start to meander. If we open up not strong, but open and go higher, we should come back and then do some testing before we can push higher. So in other words, kind of a zigzag session is very likely, but the bias now, because of Friday's very strong move, says that this down channel, the Chapman wave, there's a down channel within it. You've got the Chapman wave inside track resistance, the repellent zone that's been a barrier before. And that says, let me just extend this so you can see what I'm talking about. That says right up to the high that we just made of 18,107 in that 18,110 area. That should be strong resistance. But most importantly, how we get out of that to the upside is going to be important, because the moment you get to the 18,130 to the 30 to 50 area, that says you've taken it out. You're now above the previous highs, and there's a real good chance that you're going to try at least to test the 18,288 all-time high. That's the Dow. Then I also, what I had said for my opening, for my market overview section, overview and market today section, I had this typed in, and what it said was basically that we've probably made a peak B in the 120-minute chart, more likely than an E, and that any move higher over here would be a leg C, and that would be a positive. Most importantly, I've got a G/C in the VIX index, 120-minute chart. That says that there could be a little bit of a bounce, and today we've got more than a little bit of a bounce. We've got a 5% gain, but of course you're coming down from the 12s. You're at 13.23, up 65 cents. So this is going to be very interesting, exactly how this plays out. What we're doing here, your leg C in the S&P. Now, what's very interesting is it's still a leg. Oh, this could be even a T. Oh man, it's getting complicated. 2039. Yes, this could be D/C. All right. So what's very interesting here is that pretty much what I discussed, and the reason why we kind of light in my opening in my traders corner for our positions. One of the reasons is that within the context of what we're looking for, we kind of a little bit short and a little bit long, just waiting to see what's going to happen as it plays out. And all I can say is that you put your stops, you put your buy stops in. You can see from this particular chart that since mid-February, we've been in a trading band. And that trading band says that it's a very choppy period, a rotational correction period. And what does it mean? It means that some stocks that were leaders are starting to succumb to selling, and other stocks that had been either leaders and had just a mini pullback for a breather have regained their strength, while others are starting to show a little bit of leadership. And what we've got is leadership. I had an amazing thing that when I went through stocks over the weekend, I suddenly saw Massachusetts movers in the Boston Globe, and they had a whole series of stocks. Let me just mention that right now. A series of stocks. Let me show you. This is the E-mini, only up 2.2 and a quarter. Look at first of all, look at the up channel. Sorry, this is right there. That's a little mini up channel. That's called the inside track repellent or resistance area. We're right there in the E-mini. You've got a rising wedge formation, which says at some point when you get to the apex, you should come back down, make a U-shaped pattern, and then try to retest the whatever the highs were on the left side. And here's the other thing, that in the E-mini, just like the Dow, you've got yourself a cup formation, and not only that, it's actually the second cup formation, and you're testing the resistance area. So it might take a little bit of time yet to try to build up some strength. I think we will break to the upside rather than the downside just yet. That's different to my thinking earlier, and one of the reasons is that candle on Friday was really quite strong, and I'm not prepared to tell the market what it's going to do. I just don't think it's going to listen to me, you know what I mean? So I'm trying to follow. And now let me just show you what I'm talking about. This is a list. They weren't picking on these on purpose. This is the way it just came out. Massachusetts gainers, EBIO, 11 Biotherapeutics Company, Proteon Therapeutics, PRTO. Look at that. There it is. Look at that amazing move to the upside, following through today. There's another one. A Bind Therapeutic, BIND. I'm just reading them off the list, just as they did. That's how they got there. Look at that. Oh, another spectacular move. I want you to actually do something with this because it looks so. That candle is a hint that there's a potential to go from 7.56 today, up 85 cents, up 12.5%, right into that area of the nines. So it looked good, but it's kind of got away now. It's a little. I wouldn't have got it because I would have wanted to pull back. I would have wanted 858 somewhere around there. Didn't even get there. It gapped up. 684 is the low. Genosea Biosciences. I don't think I've ever even seen these mentioned. GNCA. Look at that. That's holding, but I didn't want it to peak E. I like the peak C, maybe the leg C in the weekly chart. Akebia Therapeutics, AKBA. AKBA. Hey, look at that. It was there and listed. I didn't actually find this attractive at all. Not yet. I think there might be a potential there, but not just yet. EIGI, Endurance International. EIGI. I like this repetitive things. Look at that. Leg B. Very good. INFI. I just thought, I mean, this is their list. They're almost all Infinity Pharma. They're all biotechs. So the little baby biotechs, they're starting to move. This is the late stage of any move. Oh, I didn't do that. I wanted to do something that I read in the Boston Globe today about amylin. Amylin, I think it is pharmaceuticals. I think that's what they call it. Not amylin. Is it amylin? I'll find it in a moment. Buying this building. It's a very well-known building, biotech I think in Kendall Square, vying for it, putting down an option to buy it. I mean, this is what's happening here in the biotechs. I think in late stage, not earlier stage, and Sage Therapeutics. Oh no, T2 Biosystems. Look at this tattoo. I like this one. Tattoo. Look at that. Nice, huh? T2 Biosystems, 1914, up 50 cents today alone. Sage, S-A-G-E. I can't believe it. There wasn't anything else. Oh wait, Sage is I don't know what Sage. Yeah, Sage Therapeutics, up $1.26 at 52.67, up 2.45 today after a spectacular move in the last 5 days. I don't know what to tell you. When I see this, I start to say to myself, "Wow, overpaying for property." The late stage, not late stage, don't mean late stage in their patents. I'm talking about a late stage in the cycle of the biotechs, IBB, etc. Look at this, Sage trading at 52.67. All I can say, and there's IBB, hasn't gone to a new high, but a very nice rally again today. We're actually now just neutral in the IBB, no positions. Isn't that interesting? And it's a pity because we gave up a 16 or 17% gain for a 20 cents gain. Didn't take my profit. I just thought that there'd be a rally. It would be an H to an M pattern. This is not an H to an M. This is much bigger. It's a very large M if it's going to be an arch formation here. And that says they're still inner buying and probably institutional buying in the biotechs, even though I'm getting signs that say it's really close to a pretty sharp sell-off. What can I say? All right, let's go to Travis in St. Louis, Missouri, talking about biotechs. Travis, how are you?
Doing great. How are you?
You're doing great because your little baby here has gapped up today, 9.86 at 87.26. Correct?
Yeah, it's finally going to make that run to that D in the monthly.
Unbelievable. We've been talking about this since it was back in the 50s, even lower. And you've just held on. You've been stubbornly correct.
I've held on, but I'm also slightly annoyed. I talked to you back on March 5th, and I sold half my position. It was more of a trading position, but I never got a chance to put it back when it dipped there a week or two ago.
That was an opportunity, but you didn't take it. Okay, well, you know what? We'll be back. Let's hold on. I'll be back. I wanted to talk about this leg D coming up. So, Travis, if you can hold, we'll be right back. We're looking at Clovis Oncology. And we'll be
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, Basil Chapman. We are back. Dow's up 22, S&P's up 2.83, and we're looking at Clovis Oncology Inc. It says lung cancer. It should be lung cancer. That's what they're working on. And we've had a wonderful position player, Travis from St. Louis. He's held this, a little upset that he finally took took profits on a trading position, never took the opportunity to ups. I'm going to sneeze. Here we go. Am I putting a Dave White here? No, I think I got rid of that sneeze. We'll see if I can keep going without that sneeze. You know, just when you think you've got rid of it, then all of a sudden it happens. But we'll see what goes over here. And all right, so you haven't had a chance, and now with the expectation of 93.34 for leg D in the monthly based on the Chapman wave methodology, what do you do? Is there anything that you've done, or just say,
No, I'm just hanging out now, and I'm just kind of wondering if this is going to go into more of an accelerated phase now here with the rest of these little biotechs, or what's getting ready to occur.
Just tell me, is this on news, or is this?
Yeah, they got an upgrade this morning. Goldman Sachs, I think, upgraded them to a buy and put a price target of like 117 on the shares.
Oh, so this is not any news related. This is a buy recommendation. Oh, that's excellent. So then what I would say to you, make it as simple as possible. You've missed, I would say, it's up 10 right now.
Yeah, 65 is where I wanted to put that other half back, but it got down to like 68 last week, and that was it.
And in fact, when it got to that 68, it looked as if it was going to have that one extra dip to the downside.
Right.
Instead, it gapped up once. This is the second gap, and there probably will be a third gap a little later on when the news comes. Okay, let me do something here. two things have happened. One is you've traded and you've position played this beautifully. This is the first time that you haven't had an opportunity to grab it and ride it for the next leg to the upside. So there's a recommendation that I sometimes make when one has got a price in mind, it doesn't get there. Instead, it just gets away on the upside. If you believe in the technicals, and the technicals here are very good in the weekly chart, they're improving a lot with today's move. They were good on Friday, but improving a lot today with the gap up. And the monthly chart, obviously, our target, regardless of what the technicals are saying, has either a double top possibly being made, but whatever it is, it says that whole 93 area, whether it goes to 93.34 for leg D or double tops with a peak C1, C2, getting real close to 93 is the objective. That's only 4 points away, 5 points away. Now, there's a way to do this within the context, let's see, legs, W. Within the context of what you're doing for risk reward, if you were waiting for 65 and it only got down to the 68, it means that you've completely missed the trading move, and now you have to rethink and go to plan B. Plan B would have been for me that if perchance you didn't get it and it suddenly got into the 77 to 79 area, that whatever your position was going to be for the add-on, you make it a smaller position. It could be a third, it could be a half, it could be just a nibble to say, hey, I want to be there for that extra push to leg D. But at the same time, I don't have to tell you that a biotech is a biotech, and there's no reason why we couldn't think that it's at 85 with a low today of 84.02, that this thing could quite easily come back within the next 3 to 5 days to the 81.79 area without any problem, without changing a thing, other than giving up a move to the upside that it might not have been ready for if it pulls back sharply, or it could have just been ready and it's saying, hey, I don't even intend to go back to the 82s, let alone the 84s. I'm at 88 right now. So the only way I can see that you would do it is whatever position you were going to put on, you would not have given it a 12-point stop. So you don't want anything crazy here. You want to put on a small position. You could either say, hey, I've missed this move, but as a test of the leg D that we think is going to come, I'm going to use the 120-minute as a guide. And there could be a rectangle formation over the next 3 days if there is some kind of a pullback. And at 88.43, I think buying at 85.20 to 83.40, a small position, and you've got to have patience with a small position because there's a chance that it could come back to the 82s, and that puts you in a losing position for 4 or 5%. But that's where I would make the decision to start thinking about whether you want to add to it. That's the whole thing.
Okay.
So that's my thinking right now. You can either do it right this minute and say, hey, no, I don't usually do that, or just have patience and say, you know what, let's see what happens. Maybe in 2 days' time we'll look at it again and it's at 84.35, and you say, what do I do now? Thanks for calling.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Basil Chapman. Thank you very much, Travis, for calling with Clovis. Hope the plan will work out. This has been in a couple of days, and I really think that you've traded this and position played it absolutely perfectly. Yeah, big deal. So you missed this last little bit up, but that's frustrating. But your plan was exactly right. Now let's do a couple of things and. Looking at a question that in about Netflix. Netflix NFLX is trading at 480.20, up 25.45, up 5.60%. This is the second big gap up day. And look at that. That's a Chapman wave squash pattern. So this says this really could go higher. And that monthly, if it breaks out, that monthly is going to be very positive. But what I love about this is that there's a left side, right side price time match. Look at that. From the gap, right there to right there. From the gap up, that huge gap on the 21st of January, closes the day before around 348, opens the next day at 414. I mean, that's huge. And never look back. So it goes to a peak F at 486.50 right on the 25th. I think it was 27th. Nope, it's the 26th of February. And that gives you a left side to the right side, exact price match to the low that was made at 409.25. It didn't even fill the gap of 401.87. And then it had these spectacular 6 sessions, well, including that 6 sessions. And isn't that interesting? And it held the support went right almost to the edge of the all the way down from 48,650 down to the 409 level. That's what is 70 points? That's 18% or something like that. And now it's just had come all the way back again. Very strong, very good move. I would prefer to see it break out in the next 2-3 days. That way you've got yourself a leg C. Yep, a leg C in the weekly, and that's very positive. And I don't know what to call that monthly. If it's a brand new leg B, that means that regardless of pullbacks, Netflix is going to have a fantastic 2011. Just real short term, it looks like 120 minutes, a little bit toppy. Then I was asked about AZO. AZO is AutoZone car truck parts. I looked at it real closely over the weekend. Why? Because O'Reilly Motors, or O'Reilly Automotive Inc., also in the parts business, had a fabulous move Thursday-ish last week, spiked up to an all-time high, and then gave it back. And I wanted to see what the technicals were looking like. And the technicals are not that great, but they're okay. And stochastic 91%, MACD good, but turning down in the weekly chart. 120-minute charts there, a little bit of a toppy phase right there, short term, very short term that is, but leg E in the weekly and fantastic leg F/B in the monthly, no signals yet anywhere to say that it's topping out in the monthly. Now, that obviously I need the weekly and the daily to start that. Now, what's really interesting about this is that AAP fits in the same category, and AAP has been, it went all the way to the 200-period exponential moving average, but the monthly and weekly are really not that good. So the leader is AZO, AutoZone, and AutoZone's trading right now down $1.58 at 700. I've got an instant restart, which you might have seen, the question from Chris. And what's really important about it is gone in this up channel right to this area that becomes the repellent zone. So I'm real close in getting at least a pullback. I don't know whether I'm going to get a short signal or anything like that, but at least some kind of a pullback, and I've got it as C/G. If you never got that dip in the MACD back in around about the 23rd, 24th, 25th, 6th of March, if you never got that, and the MACD held beautifully and kept going higher, I would have definitely have called this G. Right now, I have to say C/G. I suspect we get a pullback in the next day or two, and then we get a pop-up, and that goes to a new high. So if I'm putting it together with the best of the best, this is still showing internal strength with a chance within another few days of getting some shorter-term weakness, and how it holds 693 to 687 on any pullback is going to be absolutely key in being able to give. I've been waiting to short this for a long time. We've just watched it, stood by, look at the weekly chart, beautiful up channel going towards that repellent zone of the inside track. We'll just give it a little time. It'll give us our trade. We'll see what happens. Of course, at 700, you better be right. Or you got to actually, I like these stocks because of 1%. I don't mind having a 3 to 5% buy stop on a stock up in the triple digits, because it's a small percentage of the move, and you've got yourself the area of chart-wise. You don't really need much more than that sometimes to pick the exact turn. Okay, so this is what I've got, C/G. That's the answer to the question. Not even G/C. C is predominant rather than G at this particular time. We'll see what happens with C. Okay, next question I had was in the den. There was a question. We did Netflix. Oh, yeah, this is a question. A very, very good question. A question that should be asked. I ask it all the time. And that is, in the weekly chart, I had been expecting that April was going to be weak. Well, late March into early April. Well, it turns out we had a pullback. We had a pullback in the S&P from the 21, let's call it 2120 area, all the way down to 2045. Well, normally that would be the start of a move, and then you maybe get a bounce, and then you start your way down again. Instead, we are right now at that area of, let me put it in right now, new parallel, let's just do this, new parallel. Hey, where are these new parallels? That's interesting. Okay. Oh, there it is. Okay. Right there. I have two of them. Get rid of one. And open it out again. There we are. So now what I'm looking at is this. The next area of resistance, we've just spiked above it intraday, and now we're pulling back. I still think there's a little choppy, a couple of choppy day. I was going to say hours into tomorrow, and that should tell us a lot of information. And what I'm saying here is that the S&P's had a very nice. It was making lower lows and lower highs. No, the Dow was making lower lows and lower highs. Because the S&P held quite well and didn't go underneath its low of 2039.69 of the 11th of March, that made it somewhat different. And that says that we've got to look at, let me just change the color, it'll make it easier. We've got to look at this resistance line right here as saying, if there is a close in the S&P cash above 2109, let's say 2110 in the next day or two, I have to consider that it's going to try for the high of 2114.86. And if it gets to that level and breaks above it, it could go higher. Why? Because the weekly chart had every opportunity to close last week. There was quite a bit of bad news, and it's the response. Remember, I always say it's a higher VIX and negative response to bad news, actually negative response to any news. And if that's the case, then you've got yourself the ability to sustain a down move. Other than that, the bias is towards the upside. And I had to change my thinking over the weekend because of Friday's good action, to be quite blunt. It was pretty good. It didn't have to do that. So now there's a chance of a test of the C1, C2. We've seen this before. You either break decisively for leg D in the weekly chart, and that would say 2116 to 2118 really takes it out and says, hey, don't get in the way of this move. It's still going higher. And look what happened here. If I go back to the Dow, my Dow quartet, GE had that spectacular move on Friday. It was a news-related move. It was an extraneous move to what had been going on in this trading band for a while. That's not the issue. The issue is today's action down 80 cents at 27.72, and whether this is going to act like a single leg A, although it's a C, and fail. And that'll fail if you get under 26.80. Call it 26.70, a point lower than where we are. Get under that and says, hey, that was just a combustion from being negative and then suddenly having good news on Friday about their selling off the real estate part of the portfolio. And now look at this. We've broken to a new recovery high in the weekly, in the monthly. Now, is that going to be an F, or is that a brand new leg B to the upside? If it's a B, it says you're not going back underneath 23.41, the low of January. In fact, you're going to be making higher highs and higher lows. So as it stands right now, good action on Friday. I don't care what the reason is. It was good action for GE. Today is okay, not really what you'd expect. You'd expect more like the spike up we just saw in Netflix, that it just gives it, or Clovis, that it just gives back a little bit of the gain reluctantly. So this is something to watch. You've got IBM. IBM is acting quite nicely, actually. I think besides all the negativity that's been thrown at IBM, I would not be surprised if there is a move in IBM to test the candle of the 23rd of March. 165.35 was the high. It's at 163.92 right now. And if it breaks that, that's going to be leg C, a very quick A to B to C. So my intuition, based on just experience in these chart formations, would say a chance for IBM to test the breakdown on the 24th, where it opened at 166, went to 170.33, but it also hit a low of 161.10, closing in the 162 area. So that says IBM has a chance to help a little bit, just a little bit, in the overall picture. Triple M is holding near the top, high level consolidation, nothing. The weekly chart is actually negative in terms of the technicals, but as long as price is the arbiter of a trend, as long as it's holding up there, that's good. The daily chart says, hey, there's a real good chance by in the next few days it's going to go over 167.70 for leg A, B, C. Oh, for leg D. And here's the other thing: the monthly chart on this Triple M, a multinational conglomerate, is still very positive. And UTX, the final one, the Dow Quartet, my little Chapman Wave Index, says it's holding okay. It's really not great. And basically what UTX, one of the reasons why I was looking more negatively earlier last week, was GE, IBM, Triple M, and UTX were actually acting very poorly. Now, GE is more my short-term index for the Dow, and UTX is more my less than intermediate term, between short-term and intermediate term. And it's saying the upside's really struggling. And that's the way it is. Okay, so now let's do something else that I want to look at. I haven't looked at the numbers. So we've got the Dow up 30 right now at 18,088. The S&P's up 3 1/4. 0.17 on the Dow, 0.15 on the S&P. That's not too great. After Friday, it's not too bad. At 2,105. You got the comp index up 25. So let's look at the QQQs. 1, 2, 3. That's the NDX 100. That's not the comp. In leg B, there could be an overlapping wave. Well, not really. Can't be. So this is leg B. The big resistance is to get over 108.70s, 108.80s, let's say, and then you can retest the 109.07 level, and then you can go all the way to the most recent high of 109.42. And so far, the Qs are acting very well. Let's just stick in the IBB here. I had spoken about it a tad earlier. Look, now it's up for nice action on the IBB. Finally, it's kicked in without rolling over, and that's going to be good. Let's look at the IWM. IWM is the Russell 2000 ETF, struggling at this resistance area in the 126s. The way it looks, I do think this is a leg B rather than a leg F. And I'm going to just say that if it is, weekly chart did go to a leg F, calling it F for now. No, let me see. Was I anticipating? Let me double check. So the high was 126.32. Yes, 126.39. We're in leg F in the weekly chart. Could have recycled, but I'm calling it F for now. And there's that resistance area in the monthly chart. So that's still positive. So the bias at this point, I had to change from somewhat negative, not overly negative, until certain levels were taken out. They weren't taken out. So the VIX is going to be a real big clue right here. It's at 1327. It's up 69 cents. Nice. Thank you, Steve. Steve Rhodes just there was a question in the den that one of the VIX instruments was rallying, but the VIX was only up 70 cents. And Steve Gavril, he said, Claude, the answer to your UVXY question is as follows. The underlying instruments are the two nearest VIX futures contracts, presently K, that's May, and J, April. The May contract represents about 90% of the ETF, and the current May contract is trading a bit lower. It was much lower when you asked your question. UVXY is a futures instrument and does not correlate to the cash index. Hope that helps. So thank you, Steve. Great information. And a couple of things that I wanted to add right here is that bonds is going to be very interesting. Bonds pull back, and they pull back under the 9-period moving. You know, it will take a little time for the bonds when we get back. Basil Chapman, Tiger Technicians. I'll be right back. Give us a call, 877-927-6648, and then we're going to go to a
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. So we're back. I'll go to Biden in a second. We had a question from the Dan TLT. I was going to look at, this is very interesting. The TLT has made an arch formation. It should have gone, technically it should have gone higher, but once it started fading at the 132.76 area and couldn't go higher within another day or two, and started making this arch. I'd already drawn in the arch formation. Now it's going to test very important 129.18 support. It's a 129.49. If it takes that out, and the low on Thursday was in fact 129.13, so that whole 129.00 area is going to be very important. Why? I would think with this particular formation, on a short-term basis, even though I'm expecting choppiness in yields, I would like to see that the 128 to 127.70 area in the TLT, the Lehman 20-year T-bond fund, actually holds. If it doesn't hold, my suspicion is the weekly will kick in, and you're going to start to see lower prices, and the yields start to move higher. Right at this particular time, I still think that there's the rest of the week there's a chance for the market to go higher, then I think you've got to be somewhat careful. That's just my thinking right now. On Friday, I was very depressed. I thought, I wasn't depressed. I was upset. I thought, oh no, such a good candle on Friday. Let me do my homework. Well, I did my homework. I looked at NYA, the New York Stock Exchange, in much closer detail than I usually do. I usually look at it in detail, but not as closely. And then I said, you know what? None of the patterns I'm looking at right now suggest we will break out. You've got Germany. You've got so many other areas moving, spiraling higher. That's usually a good sign if the European markets are. But then when I looked at the charts, they're all in B, C, maybe even D in their daily. So I think they're getting close to some kind of a bit of a pullback. So as I went through the different charts and the different stocks that were doing really well, most of them said they are getting real close to the legs in the Chapman wave that suggest that from here the upside is going to be a little bit more limited, and that we've got so many channels of resistance. How they break is going to be very important. And that VIX index is suggesting that in this low area, that it's going to be tougher and tougher to go from the 12s. What is the VIX right now? 1337. So the 12s, 13s, up into the 16s without some negativity. Let me just quickly say before we go to Larry Pesavento, the Baidu, if you're in it, I'd say that the 200, I'm just going to do this now because I wanted to finish with some other things, that the Baidu is at 217.80, BIDU up 3. If you're long, that's great. But if you aren't long, then I'd get only a small position, and I would have a 4 or 5 point stop, a 2% stop on it. But most importantly, you want to see by Tuesday afternoon, Wednesday by 2 o'clock, it needs to be up in the 219 or higher area. If it is, that's going to be positive. Why? Because the weekly chart is really struggling to get off the ground, keeps going up and then coming back down. All right, let's go back to what we were looking at before. So the S&P, in a sense, has a little bit stronger pattern than the Dow. And what it's saying is that it needs to, I'm putting the focus on the S&P, it needs to get to the 210, 211, 2011 area, and it needs to do it fairly soon, because if it doesn't do it by Wednesday, then you got this pattern that says, wow, this resistance downtrend channel, inside track repellent channel is very strong, and that peak C1, C2 starts to kick in. The technicals in the weekly chart of the S&P are okay. They're not great. They're really not great, but they're not saying that they're going to break down. They will say they're going to break down if the S&P trades this week at any point under 2080. And that's 2082 is the 9-period moving average. So upside, I think there's still enough room to go up. Doesn't have to be a big move up, but it's an up move. And then we've got to be real careful. That's the way I'm looking at it right now. And stay tuned. Larry Pesavento here, and your wonderful show is always with Larry. I'll be back tomorrow. Thanks for being here. Check out my opening call. You might find it very interesting. Thank you for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.